Trading, speculation, investing. Discover the most powerful techniques to generate profit in bull and bear markets. Hear from the most successful traders in the world. This Trader's Perspective podcast is brought to you by BBOD, the largest non-custodial crypto derivatives exchange worldwide. Go to bbod.io and start your journey to financial freedom. Hello everyone, today we have the pleasure of hosting Simon Kloot for an interview in a new special edition of our new series where we're sitting down and chatting to traders all about their trading strategies and finding out more info from them. Today we have the pleasure of hosting Simon for this interview. So it's great to have you here today, Simon.
Hi Hannah, nice to speak to you.
It's great to have you here. It's great to speak to you as well. So we're going to be discussing some really interesting topics in this interview, such as talking about Simon's favourite trading strategies, how people can kind of deal with emotions in trading, and also stuff about like how to cope with losses and why sometimes people will hold on to their losses while they're trading. And Simon will give you his tips for how to deal with this. So we're also going to be discussing a bit about Simon's educational service as well and how you can join that. So I really look forward to getting into this interview. So let's get started.
Great.
So first of all, Simon, if you could just introduce yourself and
Sure.
sort of a bit about your background in trading.
Okay, so I've been trading for over 10 years. I'm a self-taught trader and I currently trade Forex, equity indices, gold, oil, and of course cryptos. I previously worked as an IT consultant in the city, developing equity trading systems for banks such as JP Morgan, Merrill Lynch, ABN AMRO. And I spent so much time coding software for traders on the trading floor that I became more and more interested in trading and less interested in programming. And that's when I originally got bitten by the trading bug. So I left the city just after the crash of 2008, partly by circumstance and partly because I'd had enough of the rat race and I wanted to work for myself. And that's really how my trading career started.
Okay. I know that a lot of people sort of get into it because they want to work for themselves and they're fed up of like the 9-to-5 job and everything. Yeah. They want to get out of that, and sort of trading is becoming popular now. So that's really interesting to hear more about your background. So now if you could tell us a bit about your main trading strategy and what kind of trading tools you tend to use to analyse the market.
Okay, so I really just use plain naked charts and with no indicators, no depth of market ladder on there, and you could call it technical analysis, but where I break away from traditional technical analysis is I've got my own unique way of analysing charts. So that's the tools I use. You could basically use any chart and do what I do on any chart. And my core framework for my trading strategy is what I call supply and demand and market structure and price action. So that's how I understand the patterns on the charts. And another big part of my strategy is market manipulation. So I'm looking to see where traders are getting trapped. And there's manipulation in the financial markets, in all financial markets up to a certain extent. And I'm looking to get on the right side of the manipulation.
Okay. So is there any kind of specific tools that maybe new traders can kind of use to use some of the techniques that you're talking about?
Okay, well, really, and this is, I know that a lot of people like to use lots of tools. So a lot of people, scalpers will use the DOM ladder, the depth of market ladder, to trade, or they'll use volume analysis tools and stuff like that. But really, I'm quite happy to have just a plain chart, and my tools are really using lines and boxes and drawing drawing on the charts and
Yeah.
looking where the price action's gone.
Mm. Okay, so that could be really good for traders as well. It might not overcomplicate it too much for them.
Yeah.
They can kind of make it a bit more simple for themselves when they're trying to analyze the market. So
Yeah,
that's
exactly.
really good. Yeah, really interesting. So what do you believe some of the most common mistakes traders sometimes make when entering the market? And how do you believe that they could avoid these mistakes in the future?
Okay, so really the most common mistakes, and everyone's made these same mistakes. We've all made these mistakes. When I was starting to learn how to trade, I made the same mistakes as well. And if you haven't made these mistakes, then really you haven't spent long enough trading. So just some of the mistakes: FOMO, fear of missing out. You see a big move in the market and you try and jump on it, and then what happens is it will come right back to past where you got in, and you'll be negative before you knew it. And there's over leveraging, and I guess we'll talk about that a bit later, but there's putting too much risk on one trade and having no decent risk management. So that's some of the mistakes, and having no plan. And often I'll see, traders will send me a chart, just a 1 minute or a 5 minute chart, and say, what do you think of this? And I'll say, well, have you looked at the 4 hour or the daily? Do you know what the bias is? So it's very easy to get wrapped up in a very small time frame because the candles are jumping around and not know what's going on in the big picture, understanding the higher time frame. So that's just a few mistakes. And then there's fear and greed. That's a popular one. So, and fear and greed, it really comes from not having a plan again, and not having a plan to enter or to exit your trades, and just getting carried away in the moment.
Yeah, so, I guess. Sorry.
Yeah, so that's just a few things that everyone really suffers.
Yeah, I guess it's easy to kind of fall into that trap of, like you said, the fear of missing out and not take time to analyze it properly and look at the bigger picture.
Yeah, exactly. And not having a plan and just getting carried away with the moment because you've seen the market move and you want to get involved and you don't want to miss out.
Yeah.
And also people are desperate to make money, and right from the very start they think this is a get rich quick business, and it's not. It's the same as any other business. It's the same as becoming a doctor or a lawyer or an airline pilot. If you don't put the work in, then you're going to fail, and the failure rate is a lot higher than in any other business.
Yeah, okay. I guess probably because a lot of people think it's this get rich quick scheme, and they don't, like you say, take the time to work hard at it, and probably why a lot of people then end up failing.
Exactly. So really it's a case of really putting in the work, and then you'll see dividends at the end of it.
Okay, brilliant. So this kind of leads nicely into our next question, which is, how important are emotions in trading, and how can traders sort of deal with this whilst trading?
Okay, well, I'm glad you said that, because it's absolutely the most important thing, and controlling your emotions is the hardest thing to do, but it's got to be done. And the thing about trading is it's very counterintuitive to any other job, and that's probably why it's so hard to control your emotions, because unlike a regular job where you're paid to be productive, you always want to be seen to be doing some work. With trading, you're paid to sit and wait, and that's hard for people to do at first. And also impatience comes into it as well. And one of the biggest problems is that people are impatient and they don't want to wait for a setup to come along. And brokers know this, so that's why they provide trading platforms with lots of flashing lights, because it's like a casino to get you actively trading. And actually, when I worked in a bank, they asked me, I made the prices flash on the screen, and they told me to stop flashing the prices because it was distracting. So, it's the opposite of what you think. So that's just some of the emotions, and it all comes back down to all the reasons, all the mistakes that people make, the FOMO, and it's all induced by the emotions that you need to get control of.
Yeah, okay. Yeah, I now understand why that's so important when trading. So yeah, that's really interesting to hear more about that from you. So again, this leads kind of nicely into our fifth question, which is, why do you think people hold their losses in crypto? So for example, if the price of a coin perhaps drops by like 75%, sometimes traders will then still hold this position rather than just cutting straight away. And why do you think traders do this? Why would they hold on to those losses?
Well, first of all, let me say, people who hold a single trade into 75% drawdown, I would call gamblers, and they really shouldn't be trading, because really, I'd say it's crazy to gamble 75% of an account on one single trade. That's like going to Vegas and putting your life savings on red or black. So for me personally, I rarely risk more than 1% of my account on any one trade, and if you take that attitude and you're only prepared to risk, say, 1% or even 0.5% on one trade, then if you lose a trade, you're less likely that your emotions are gonna cut in and make you do silly things. So if you suddenly find yourself at 75% drawdown, there's no way out after that. If that trade goes wrong, then you're finished. So and then there's another thing in trading. The worst thing you can do is let your ego dictate that you must win every time. So if you've put a trade on and you really want it to work out, and it's going against you, and some of the worst things you can do are add to that position and just hold that deeper and deeper into drawdown. What you want to do is cut your losses really quickly and accept that you're wrong. And really that's also very counterintuitive to a regular job, where in a regular job you want to be seen to be winning and getting every single task right. You definitely don't want your boss to see you taking failures. But in trading, it's completely opposite. You need to take those failures really quickly and then move on to the next trade. So,
I guess sometimes it comes down to they don't want to face the truth and face that they've made that loss, I guess.
Exactly. And also, there's a famous saying that the market can stay irrational longer than you can stay solvent, and that's always a good one to remember.
Okay. Do you think it's ever down to the fact that, say, in cryptocurrency, people maybe have such a strong belief in a certain coin or in the cryptocurrency that that's why they don't want to cut losses so much, perhaps in general?
I think that's it. And I think also there's a lot of inexperienced traders in cryptocurrencies. So there's a lot of new traders that have come on the scene since cryptocurrencies have got popular, whereas a lot of us, like me, have come from trading traditional investments, and cryptocurrencies is just another asset class to trade. But actually that's another thing that some people don't distinguish between an investment and a trade. So if you're in a trade, you need to know exactly where you're going to cut your losses. You need to have good risk management. If you're in a investment, you can afford to hold that investment more into drawdown because you're looking at a very long time scale, but you're not limited by leverage. So even if you're a real Bitcoin believer, then you could potentially hold your Bitcoin if it goes down to zero, and then if it may go back up again. But if you're in a leveraged trade and you're using leverage, you cannot hold that trade to zero. You can't even hold it to 50% of that value. So there's a big difference between investing and trading.
So I guess if you have a real belief in like cryptocurrency or a coin, you should be thinking about investing in that and not so much just a short-term trade.
Exactly.
Okay. So finally, we'd love to know more about your educational service and how perhaps a newbie to trading could benefit from this.
Okay, well, I do provide a course, and it's on udemy.com. So if you just go to Udemy, newbie.com,
Okay.
and you just search for supply and demand, and you'll come up with my course. My course will be the top one in the listing. And and if you want to know more about what I do and you're just interested in reading, I've got a blog, and I do quite a number of articles, so you can always go to tradersimon.com, and there's lots of stuff to read there as well.
Yeah, okay. So someone who's getting into trading can benefit a lot from the different services that you provide. So okay. So of course, we will link all of the links in the description, and it was a pleasure to have you here today, Simon, for an interview.
Lovely speaking to you too, Hannah.
It's been really good, and I feel like I've learned a bit as well, because I'm only just getting into trading, so it's nice for me to kind of learn a bit more as well.
Great. Well, it is really, there's so much to cover. It's a huge topic, and I'll be happy to come back and show you some more detailed stuff at a future date.
Yeah, so everyone at home should also stay tuned, because we're going to have lots more interviews just like this, and hopefully Simon will come back soon and we can cover some more topics. If you want to keep up to date, then please hit the subscribe button, and also like this video on YouTube to show that you enjoyed it and you want to see more interviews. You can also check out BBOD on our social media. Again, all of the links for everything will be in the description. So you can find out more about BBOD and find out more about Simon's educational service and his blog and everything. So thanks everyone for listening today. And thanks again, Simon. We'll see you all next time.
Thanks very much, Hannah.